JP Morgan Chase suggests that the market share of precious metals and precious metals investments in the US market, where JP Morgan Chase can track it, is estimated to be below 0.5%. What's interesting about their statistics is that they theorize that the 4-decade mean market share was 2%. So if you merely revert to mean, demand for precious metals increases fourfold in the largest savings and investment market in the world.
Rick Rule is the founder of Sprott Global Resource Investments, a company that manages alternative assets globally, focusing on precious metals and other commodities. Rick is a regular speaker at industry conferences and has discussed natural resource investments in several interviews. He believes that this is the best time to invest in natural resources. According to Rick, due to various economic and macro factors, the demand for precious metals like gold and silver will quadruple in 2024 once the rest of the investment world understands the master plan. The central bank's sudden policy reversal has been the core subject of several precious metals-related interviews and conferences since they started buying metals at an unprecedented rate in 2021. These banks sold their metals and bought US Treasuries for decades, so their abrupt change drew the attention of well-known investors and commentators. Experts like Rick were quick to connect the dots between the chaotic economic conditions in the United States and central banks' interest in moving away from the dollar and investing in precious metals like gold and silver. Rick believes that central banks will not be the only ones buying these metals at an unprecedented rate in the near future. He thinks more investors, including money managers, pension funds, family offices, and others, will increase their exposure to gold and silver due to the gloomy economic conditions in the United States and other economies. Rick believes the demand for precious metals will quadruple soon, followed by significant price increases. We will now show you clips from Rick Rule's recent interview with Mike Maloney. He talks about central bank accumulation, why silver is a lifetime opportunity, and his biggest fear about gold and silver prices in 2024. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos. You can also check out our other videos on gold, silver, and other precious metals. Thank you, and enjoy the video.
The first is that the increase that you've seen in the gold price hasn't come from retail buying. In fact, if you look statistically at the precious metals ETFs, what you've seen is retail selling in Europe and the United States. The buying has taken place by central banks. And I think that's the key reason why the gold stocks haven't moved. Central banks don't buy gold stocks, they buy gold. If you begin to overlay retail buying on the central bank buying that you've seen over the last 2 years, then I think you see an explosive move in the gold price. And I think at that point in time, it probably carries through to the stocks too. The second comment that I have for you is that the generalist investor still can't spell gold. They don't care. They think that in an inflationary period, that they do better with technology companies that have high operating margins, that the best guard against inflation is a hugely profitable business. There's some truth to that. Buffett did extraordinarily well through the decade of the 70s by focusing on companies that had pricing power. And I don't discourage people from looking at that, but I also do think that people need to pay much more attention to inflation protection that is easy to understand. The difference between gold and say NVIDIA is that it's pretty easy to pronounce and understand gold. And NVIDIA, I just hope I got right. The third comment I would have, however, is that interest in gold among young people and non-traditional people is increasing very rapidly. At my own site, Rule Investment Media, I'm getting an average of 40 new subscribers a day. And they aren't the old, bald, fat, white, God, guns, and gold crowd. The new audience is at least 35% female and more than 50% non-North American. So I think it's important that the gold industry and the gold mining industry begin to address new audiences. I think that's very important. What you'll find is that interest among people under the age of 40 in gold and silver is explosively high, measured by my own database. And JP Morgan Chase suggests that the market share of precious metals and precious metals investments in the US market, where JP Morgan Chase can track it, is estimated to be below 1/2%, which is to say,
Wow.
suggest that less than 1/2% of all savings and investment assets in the United States are comprised of precious metals and precious metals related investments. What's interesting about their statistics is that they theorize that the 4-decade mean market share was 2%. So if you merely revert to mean, demand for precious metals increases fourfold in the largest savings and investment market in the world. To put that in context, the US market controls between 22 and 23% of savings and investment assets on the globe, including foreign investments in the United States. If you had reversion to mean, you would see a quadrupling in demand in a market that comprises between 22 and 23% of the total market for savings and investment assets on the planet. That's precisely what I think is going to happen, which is one of the reasons why I'm so bullish about gold and silver.
Rick is extremely bullish on precious metals like gold and silver, and describes both as real money and the natural conclusion to the collapse of the global financial system. While other gold bugs are celebrating the metal's recent upside moves, which took it from $1,821 per ounce last October to over $2,300 at current prices, Rick is not as excited and predicts that there are massively larger and more significant upside moves for the precious metal. In his words, "The music has not started yet. It starts when gold is trading at $7,000 or $8,000 per ounce." According to Rick, investors are gradually losing confidence in the US Treasury market because of the government's insistence on excessively printing money out of thin air. As of early Thursday, the US national debt was $34.684 trillion, with a budget deficit of almost $2 trillion. According to the US debt clock, the official budget deficit is $1.812 trillion, but the actual deficit is $1.957 trillion. The net interest on the national debt is also quickly closing in on $1 trillion, figures that would have been almost inconceivable a few years ago. Let's get back to Rick's discussion with Maloney.
What I would like to do in terms of my discussion about the gold market is keep expectations rational, keep expectations real. Remember that prices are set on the margin. They aren't set through the whole value chain. 4 times change in demand, given that not all of the gold that's held is held available for sale, could have dramatic increases in price. JP Morgan Chase also estimates, and they say it's an estimate because they didn't have accurate records then, that in 1980 and 1981, that they believe the market share for precious metals and precious metals related assets in the US market was above 5 and, quote, perhaps substantially above 5%. So if rather than merely returning to mean in the US market, if demand for precious metals, or rather, if precious metals market share took out the old nominal highs, then you have a truly goofy number. The truth is, however, that too many gold positive channels try to appeal to people's emotions. They try to give them really wild clickbait headlines. And I don't want to do that. I want my audience to be prepared for simple arithmetic. And the simple arithmetic is dramatic enough. In my experience, the immediate impact of a variety of fears can impact the precious metals price. Looking at history, the most important variable is the one that you track, which is to say the fear that savers and investors have about the maintenance of their purchasing power in fiat currencies. In the very near term, I think what happens, I think I've observed this over 50 years being involved with investors is that as investors begin to feel the fear associated with the deterioration of their purchasing power, they use any psychological excuse to express that fear. And so war, or the threat of war, becomes the excuse to exercise a strategy that they were already considering as a consequence of financial fears. Now, the second part of your statement is very profound. The want of societies around the world to exercise their political will, given the unwillingness of their own citizens to pay for it, means that they have to borrow or they have to print to wage these wars. Printing new specious currency units without doing anything to increase the underlying value of the economy always undermines the value of the existing currency units. If you have, let's say, 1 trillion currency units, call it what you want. Let's call them Mikes just for fun. And Mike decides that he's going to print 200 billion more Mikes to keep the trillion already in existence company without doing anything to increase Mike's net worth or his income or the utility he generates. What he's done is basically devalued the existing stock by the amount that he's added. And there's no particular difference between a Mike and a dollar. They're both specious currency units. The difference, I guess, is that the dollar has an army and a navy behind it, and Mike is somewhat more peaceful. But that's the only difference.
Rick has made several poignant statements, all communicating the direness of the situation of the US and global economies. Amidst all the confusion, precious metals and commodities-related investments provide a safe place for investors who want to get out of the system and invest in tangible assets that cannot be created out of thin air. However, when investing in precious metals, it is important to have a long-term time horizon and stick to your investment strategy regardless of fluctuating market conditions. We are in very uncertain times. The economy is showing more resilience than everyone expects, yet government debt continues to spiral out of control, and there will be more uncertainties and chaos ahead. This is why investors like Rick Rule advocate returning to trusted hard assets like gold and silver that have stayed true to their fundamentals for centuries. What are your thoughts on Rick Rule's interview and his analysis of the current economic situation and market conditions? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.